Welcome back, traders. It's Friday, December 19th, the end of the last full week of trading. Let's get into the market movers report for the day. But before I actually really get into it, I realized that I have not mentioned the fact that you should hit the like and subscribe button if you like these videos, just to make sure that you'll always get the videos as soon as I post them and you'll never miss one. So if you like this, this daily wrap up that I've been doing, just hit the like and subscribe button and then you'll never miss another one. All right, let's get into it. So today was what's known as a triple witching day. And this happens 4 times per year in March, June, September, and December. And it's just a quarterly options futures expiration cycle, not specifically a year-end event. And I actually heard on CNBC this morning that $7 trillion worth of options expired today. So that's trillion with a T. So obviously, big institutional players were doing a lot of housekeeping today with this triple witching event happening. And what expired was stock options, stock index futures, and stock index options. Those all expired today. This creates massive volume as traders roll positions forward or close them out, but it's mechanical rebalancing, not strategic year-end positioning. So the major indexes just closed higher today, with the NASDAQ leading the charge. The S&P 500 added 0.9%, the NASDAQ gained 1.3%, and the Dow climbed to 0.4%. And for the week, the S&P edged up 0.1%, the NASDAQ rose 0.4%, while the Dow slipped 0.6%. So the big story today was Oracle surging over 6% today after TikTok signed binding agreements to create a U.S. joint venture, with Oracle taking a 15% stake alongside Silver Lake and Abu Dhabi-based MGX. The deal, which is expected to close January 22nd, finally resolves years of political pressure to force ByteDance to divest TikTok's U.S. operations. Oracle will house sensitive U.S. data and validate TikTok's compliance with national security terms, a massive win for the cloud infrastructure company that's been getting hammered lately on concerns about its AI spending and data center debt levels. So I talked about that a couple days ago with basically the market not exactly being too happy about the debt levels of a lot of these AI tickers. But this news couldn't have come at a better time for Oracle, which had crashed over 30% from its September highs after reports that Blue Owl Capital backed out of a $10 billion data center project. And today's rally did help stabilize the entire AI infrastructure trade. Nvidia jumped over 3% today on reports that the Trump administration began reviewing license applications to allow H200 chip sales to China. Remember, Trump already approved this earlier this month with a 25% fee going to the US government, but the interagency review process is now actually moving forward. The H200 is 6 times more powerful than the restricted H20 chip, and Chinese companies like Alibaba and ByteDance are reportedly eager to place large orders. This helped lift the broader semiconductor sector today. And on a quick side note, I actually had a nice winning Nvidia trade today. I got in fairly quickly after we opened up and then got out right at the peak levels. I can't remember exactly what time it was, but we had a nice, real big spike up and then kind of leveled off within the first hour of the day. And as soon as that leveling off started to happen, I closed it out there. And it was just a few contracts, so it wasn't like a gigantic trade. But, again, I saw what I usually see every day and played it the way I always play it and made some money today. So yay Nvidia today on that trade. But the biggest loser today was Nike, down nearly 10% after reporting a 17% revenue collapse in China, its 6th straight quarterly decline in that critical market. Even though Nike beat earnings expectations and showed 9% growth in North America, investors focused on the ugly parts. Gross margins contracted 300 basis points with management blaming $1.5 billion in annual tariff costs from Southeast Asian manufacturing. CEO Elliott Hill admitted the China turnaround will take some time, and guidance for next quarter showed continued margin pressure. This is what a beat looks like when confidence is broken. So next week, we're going to have a short week. Christmas is on Thursday. There'll be a half day on Wednesday. So I'm just going to plan on doing one of these market recaps next Monday and Tuesday. So I'll be back Monday and Tuesday, and then I'm going to be off until the following Monday, which will be the 29th. So I'll do the 22nd and the 23rd. I'm going to take the rest of that week off, and then I'll be back on the 29th and the 30th of December. So on the 29th and the 30th, it's going to be that final year-end push, and we're in the traditional Santa Claus rally window. So typically the last few trading days of the year plus the first few days in January are what they call the Santa Claus rally window. But with the S&P up just 0.1% this week, despite some violent intraday swings each day of the week, traders are definitely positioning for a quiet finish to 2025. So for next week, if you decide to trade on Monday and Tuesday, I would just say be very, very careful. There's going to be low amounts of volume. As I've said earlier this week, most of the institutional traders will not be working, so whatever action there is going to be retail traders, just like you, sitting at home, at your desk doing your trading. So it's going to be mainly all retail trading next week. It's definitely still possible to make money, and I will be trading myself next Monday and Tuesday, but I'm going to be very cautious because I know that the price can, wildly fluctuate when you don't have the big money players in the game, since most of the institutional guys will be at home. So that's it for today. We'll see you on Monday. Have a great weekend and enjoy yourselves. Take care, everybody.